Welcome on board. Rajesh Palvia along with Kunal Bothra is already with us onto the show. Rajesh, hi, afternoon. Good to have you on the show. Once again, making that attempt, Rajesh, to get back to the 26,000 mark. What's your reading on the charts and where do you think the Nifty can head next week? Some more consolidation, you think?
Good afternoon. So it's a multiple attempt to, regain about 26,000 level for Nifty, and Nifty is struggling to give close about 26,000 level since last couple of trading session. It's volatility is taking place in last couple of days, but looking at the broader market action in today's session is clearly giving us sign that, yes, possibly this time Nifty will succeed to give breakout over 26,000 level, as most of the large cap space and the beaten down stocks are also showing sign of pullback. So in my sense, yes, as Nifty is now trading about 25,900 level, I think if it's trades above for next couple of days, I think yes, there is a possibility that in this uptrend we could cross 26,000 level, and rally can extend further to 26 150, 26 200. That's the next level where we are projecting for the Nifty. For Bank Nifty is again, 59,000 is the make or break level for Bank Nifty. If we continue above 59,000 level, I think here also some recovery we could see in large cap banking space as well as in the PSU banking basket. And so we could get some support from here also, from the banking space also, and Bank Nifty can also scale to the level of 59, 300, 400 zone. So here also one can remain on the long side of trade with stop loss of 58,800.
Okay. Rajesh, what about IT and your top picks within that basket?
So IT again back in buying action and looking at the Nifty IT index. I think the way Nifty IT index has moved up and now negotiating with immediate supply zone of 36,700, 800 zone. So if Nifty IT index able to surpass this zone, then we could see some recovery trade or some short covering action in most of the large cap IT stocks, and then possible extension of rally towards 39,200 we could see. So at this juncture, one can hold on as near-term charts are showing sign of strength. Nifty IT is moving in upsloping channel. So at this juncture, 38,400 is the important level to watch for. From large cap IT space, I think one can focus on Take Mahindra. That stock is looking attractive on the near term, short term structure, as the stock has already broken out its consolidation range. So we believe that if Take Mahindra continues to hold above 1580 mark, I think upward trajectory would be there around 1640, 1650 for near term perspective.
Right, okay, that's the take coming in on some of those buzzing stocks, while of course Srinaam continues to hold up and another 3.5% up in trade. Look at a Max Healthcare as well. After one acquisition that they made, that stock is higher by 3%. BEL has been going very strong, a 3% move coming in there as well. And then NBCC, Polycab, Idea, these are all names which are also looking good. In fact, Kunal wanted a sense on the charts of NBCC, because ever since the flurry of order wins began to come in, NBCC has been springing up in trade. But NBCC, NCC, L&T, where within the infra lot are you finding bets to buy?
Back with closing trades, and you're watching ET now. Before we move ahead with the show, just want to mark the uptick that we've seen in the broader end of the market right now and the Nifty. Nifty's recovered about 0.3% from the day's low, and we're now above that 25,950 mark. We've managed to hold on well to the gains that we've seen ever since we've opened for the day. But the real exuberance coming in today from the broader end of the market. The Nifty mid-cap is now at the highest point of the trading day, a 1% uptick coming in for the Nifty mid-cap, and similar moves coming in for the small-cap index. Remember, the small-cap index is one of the top losers when you compare it with the benchmarks and the broader market indexes since the year on a year-to-date basis. So let's get a better sense of what lies ahead for the market as we draw down to the end of the year. We have Ashi Anand, founder and CEO at IME Capital, joining us on the show. Ashi, hi. Good afternoon and thanks for your time today. Give us a sense of the uptick that we've seen in the broader end of the market. After quite some time, we're seeing some cheer over here. How sustainable do you think this is?
Sure. So I kind of think, firstly, thank you for having me on the show. I think markets are likely to broadly
be range bound in the near term. You're likely to see it kind of go up and down within a fairly tight band. The core things that markets kind of waiting for in order to get the next direction of the market or the next larger up move of the market, I think you need greater visibility of the growth recovery. You have seen improvements clearly in Q2 results, and there were kind of clear indications that Q3, Q4 onwards, you are going to start seeing improvements in demand across different sectors. Now, how well this plays through in the Q3 numbers, which is going to start another kind of 20, 30 days from now, that is going to be very, very key to understand the kind of the future direction of the market. The other core thing that kind of the markets are really focusing on is going to be what's happening with the rupee and what's happening with the US-India trade deal, and the two of those are quite linked. But I think until you don't have some clarity around what's going on the external sector and what's going to happen with this particular trade deal, it is kind of causing some amount of a barrier to markets moving up. The core view that we have in terms of market movements in the near term is until you don't get some clarity on these two factors, both of which should hopefully come through in the next couple of months, you are broadly going to remain within a particular type brand. As these come in, you should hopefully enter the next phase of the market bull move.
Ashish is wondering, hi, afternoon, firstly, where the earnings pickup will come in, and a meaningful one at that. You know, while already in the earnings in the quarter gone by, one has seen a few upgrades coming in, but when do you think it'll be more broad-based?
Sure. So, Aisha, you know, that's broadly what everyone is really trying to kind of understand and evaluate, right? There are a few pockets that are seeming kind of interesting. Digital platforms, firstly, continue to be very, very robust in terms of earnings growth. I think that is something which should continue to kind of remain very robust. But in terms of kind of sectors that have been weak and we kind of expecting to start to see rebounds from the third quarter onwards, is one in a very large part of the market is really the whole lending space. You have had, especially for banks, a decent amount of NIM pressure, as well as asset quality issues. Both of these clearly seem to be close to be bottoming out, and you had fairly strong indications of that in the Q2 results. Now, how much this kind of improves as you go into Q3, Q4, it's not that the NIM pressure has completely gone away, but it is likely to start reducing, and the base effect is becoming more favorable. Asset quality clearly doesn't seem to be worsening. So I think that is kind of one segment where banks, and it's a very large part of the market which were under pressure, you are likely to see an improvement come through out there. The next big one is really consumers. And you've had a number of things which are all beneficial for consumption demand, starting from income tax cuts at the start of the year. You've had kind of GST cuts. After that, you've had a very significant decline in interest rates. You have had a fairly decent monsoon. Now, all of these factors are all contributing towards a consumption recovery. You also have likely to have a fifth pay plan kind of fairly soon in the coming year. Now, all of these are all fairly supportive of kind of a consumption recovery. On the ground, you're seeing this very clearly in auto, but not yet as strongly in certain other segments. So I think that's the other core segment that you're kind of most optimistic about. The third is really this whole capital formation theme, be it defense, be it capital goods, cement, real estate, etc. There was kind of momentum. That momentum is kind of priced into these stocks. Do you see an improvement in momentum in these spaces? I think these are the 2-3 core areas that we're focusing on.
And Ashi, I remember last time you joined us in our studios over here, you were very positive on this entire platform company play, the internet companies. How are you seeing some of them shaping up right now? Swiggy now going to be a part of the FNO index from the end of this month. We've got back-to-back positive news coming in on Paytm payments as well. What is your take on some of the internet companies, BPC particularly, and where do you think they're headed from here?
So our view on internet and digital platforms is very, very clear. We believe this decade is going to be about this particular theme. The value migration that you're seeing from traditional platforms or traditional businesses towards new age digital platforms is a structural theme which is going to accelerate as we're going forward. Now, the important point is this isn't one segment, be it kind of fintech, be it insurtech, be it BPC. You have multiple segments of the industries or sub-industries. All of these, the fastest growing companies in each of these industries are all these new age digital platforms. we see these companies, a lot of these companies have already achieved significant levels of scale. Meesho in kind of less than 5 years, right, has kind of become the second largest e-commerce platform in terms of volumes. So you've seen the way Grow has kind of grown. You've seen Zomato, Swiggy, etc. These companies are growing incredibly rapidly. They're already very large in terms of their respective market shares, and the relative extent of growth outperformance to traditional businesses is only going to continue kind of going forward. So we're seeing these companies become extremely kind of large companies over the next 5 to 7 years. Profitability trends are also quite kind of encouraging, and our longer term models show that these companies can be extremely profitable over the longer term. It's a really great kind of a combination for kind of value creation. Now, our view on the space is that it's a very clear longer term view market's going to do in the short term. But in the short term, we are aware of certain kind of growth challenges in some of these companies. So if you're looking at kind of Eternal and Swiggy, there are concerns about increased competitive intensity in quick commerce in the near term with Policy Bazaar, their new insurance regulations, which are kind of coming in. So there are a few kind of near-term headwinds, but this really doesn't distract away from the theme that if you are looking at where value is going to be created in India over the coming decade, we clearly believe this is a space you're going to see it.
Okay, just looking at some of the losers as well, important to mark that. While the breadth of the market, of course, is quite supportive, you've got a Blue Star, you've got a Chola Finance, Voltas, HDFC AMC, and Novama, which are the ones which are in the red in today's trading session. But Rajesh, before we let you go, any weakness in the market or any segment or sector that you can pinpoint specifically?
So as such, if you look at today's action, I think most of the sectors are still in the up move. But sector like power sector is still under pressure, and whatever pullbacks which we are witnessing in most of the power stocks are still facing the major challenges to cross their supply zone. So I think this sector we may see further continue on the weaker side, and sell on rise would be the strategy for a stock like Tata Power until this stock not crosses above 390 zone. I think trend is likely to remain on the bearish side. Again, the same behavior for NTPC also. It's continuously facing the challenge at around 325 supply zone. So this sector can continue further more weakness in the near term perspective. And another sector where we feel that cement is another space where supply pressure is there. Stock like ACC, Ultratech, all these stocks are under pressure, and I think minor pullback should be used as a short opportunity in this sector.
Rajesh, appreciate that view, and thank you so much for joining us today. Good chatting with you. On that note, viewers, we'll slip into a very short break. Be right back and chat more about the market, the last lap of the market for the week on the other side.
Himself. But food reminds me, Ashi, of food aggregators and the QCOM space. The underperformance of late in Eternal, and the fact that it seems that, Swiggy is kind of taking over. I mean, this intense competition in any case is par for the course. Though some of the brokerages believe that when Zepto does IPO, it's not going to be a big threat to Zomato, or for that matter, even Swiggy.
Sure. So actually, we're not too concerned about the near-term underperformance on an Eternal. This is something that we were actually expecting. What you did see is, I think in Q1, the markets got a bit carried away in terms of early kind of beliefs that losses on quick commerce may be bottoming out. We clearly kind of believe that quick commerce is such an attractive opportunity longer term, that competitive pressures are likely to only increase in the near term. At this stage of kind of evolution of a digital platform or a particular new segment, it is more important for companies to invest aggressively to defend their market share and defend their longer term competitive positioning than try to focus on profitability too much in the near term. But what you have kind of seen in terms of price movements in the on Swiggy, Zomato over the last kind of 6 months, you saw a very strong bounce after kind of Q1 on the back of kind of markets possibly believing quick commerce losses may have bottomed out. And then in Q2, as kind of companies started indicating that yes, competition is heating up and incremental investments may be required, you've seen some kind of a pullback. This, according to us, is really too much of a market focus on what's happening in the near term. These companies are not this quarter or this year bets. These are bets in terms of what these companies are going to develop over the next 5 to 7 years. And really, from that perspective, increase investments to defend your market share and build out a position is actually really quite important. In terms of the kind of relative positioning of these different companies, I think Eternal very clearly has been the kind of leader as compared to Swiggy in terms of execution, both in terms of growth and profitability. And that did kind of lead to quite a healthy premium that Eternal trades at over Swiggy. What you are kind of seeing in the near term is a certain amount of valuation kind of bounce back, where the relative discount between the two is normalizing. But I think Swiggy still has a fairly large way to grow in terms of being able to narrow this kind of gap that there is between the kind of execution, and how much they're going to be able to narrow that gap will really kind of impact how the relative price performance of these companies are going to be over the kind of medium term. Lastly, kind of asked about Zepto. Zepto would really be quite interesting because if you are looking at both Eternal or Swiggy, I think the food delivery business, while still growing at very healthy rates and still extremely valuable over the longer term, the big delta growth is really coming from quick commerce, and Zepto is really a pure play on that particular space. Most people in the market, kind of including us, believe that quick commerce is going to be dominated by these three players over the longer term. And really, I think all three are really quite interesting.
Interesting take coming in on the entire food delivery and quick commerce space. On that note, we'll slip into a break, but as we do,
Back with closing trades right here on ET now, and we're holding out okay. In fact, closing the week quite okay, one should say. Although the better part of this week hasn't been quite the same. But that said, we're finishing off at that 26,000 mark, or at least closing in on that when it comes to the Nifty spot for sure. The futures, of course, has made it to that level already. IT once again, and the strength in IT now seems to be broadening out. You've got a KPIT holding up very smartly today. Tata Elxsi holding up almost about 8%. A Polycab is higher by 5%. Idea is perked up almost 6% as we speak. 12 rupees is already where the stock is. And then, of course, NBCC also, which is going very strong. Shriram, well, after that MUFG deal, it's an unidirectional move. You're seeing an uptick of about 4% on Shriram, BEL, Max Healthcare, Tata Motors, passenger vehicles. There are all names which are holding out very, very smartly as we speak right now. But Ashi, just wanted to get your sense in on where is it that you're seeing, all that the government has done with regards to consumption actually translate into real economy and earnings growth. Because it seems like for now it's very concentrated in autos.
Yes, right. So I think that's going to be really quite interesting to see. It is important to understand that with the GST rationalization, some of the near-term pressure that you are seeing in consumption is just driven by the fact that the supply chain needs to kind of pass through the old kind of GST goods and the new GST kind of the new products at the newer pricing needs to kind of come in. And that there will be 1 or 2 quarters of pain related to this GST related disruption because of a shift towards a new regime. We believe that kind of Q3 may still have some lingering impact of this. You start to see some green shoots in other segments, or at least we're hoping. In consumer companies, as you go into Q3, I think the festive season was really quite strong. But after the festive season, at least on ground kind of channel checks seem to indicate that consumption demand hasn't yet come back strongly enough. It's really Q4, and I think the next year is when this kind of overall recovery across kind of other segments of consumption, right? Ex auto, be it kind of consumer staples or more importantly, kind of consumer discretionary demand. You are likely going to see this towards the end of the year, and I think next year is where you should see this kind of coming back, firing quite strongly. So kind of the hope is that as you go into FY27, Not only do you have the whole banking sector with quite strong earnings growth outlooks, consumption hopefully coming back, and if you do kind of have capital formation trends out there also turn positive, that's really when kind of the overall market earnings growth trajectory into FY27 could look quite interesting.
Kunal, what's your sense?